Hi everyone, today we're going to be doing a quick comparison of two Vietnam ETFs, VNM and VNAM. We'll look at who runs them, what indices they track, their size, fees, sector tilts, and recent performance, and we'll also do our best to point out what each difference actually means for individual investors. And just a quick reminder before we begin, this is for informational purposes only, and this is definitely not investment advice. The two ETFs that we're going to cover today are VNM and VNAM. The VanEck Vietnam ETF, ticker VNM, is issued by VanEck, a New York-based global asset management firm, and the Global X MSCI Vietnam ETF, ticker VNAM, is issued by Global X, a New York-based ETF provider that is a subsidiary of the South Korean firm Mide Asset. Both of these are established and well-reputed ETF operations. VNM tracks the market vector Vietnam Local Index and keeps any one stock under 8% at each quarterly rebalance, while VNAM follows an MSCI index that limits concentration at the top. No stock can exceed 25%, and the combined weight of all stocks above 5% cannot exceed 50%. This essentially means that VNM enforces a tighter cap on each stock, while VNAM enforces a broader cap on the top group. VNM was launched in 2009 and VNAM was launched in 2021. VNM has a longer history, and there's thus more data through different market cycles and typically more investor familiarity. On assets, VNM is much larger, with about 577 million under management as of August 2025, while VNAM is smaller, with just under 18 million under assets. Bigger funds usually mean tighter bid-ask spreads and deeper liquidity for large orders. As for the expenses, VNM's expense ratio is 0.68% and it's capped at 0.76% until May 2026, while VNAM's is 0.51%. The monthly difference isn't large, but over years this could add up. As far as the number of holdings goes, VNM currently has 51, while VNAM has 66. And as far as the composition goes, both funds lean heavily on financials and real estate. Consumer staples also appear at the top with a slightly stronger composition in VNM than VNAM. Overall, VNM is bigger, older, has a slightly higher fee, and is a bit more concentrated, while VNAM is smaller, cheaper, and a little bit broader at the top due to MSCI's diversification rules. Both of these will give you access to Vietnam, but with a slightly different composition. Now let's look at the performance data based on data from ETF Database. Across the recent windows from the same date from ETF Database, VNM's performance is slightly better. Doesn't necessarily mean that VNM is better, but it relates mostly to index rules and timing. As far as the 3-year annualized return, over 3 years both show positive annualized returns on ETF Database's series, but VNM again is slightly higher. This is consistent with VNM's weighting tilts during this cycle. For long-term performance, we use issuer-reported NAV returns since inception, which ensures consistency across each fund's lifespan. VNM, launched in 2009, shows a slightly negative annualized return, while VNAM's, launched in 2021, shows a steeper loss. This reflects launching into a tougher period for Vietnam marked by tight global rates and a domestic property and bond cleanup. The key point here is that these since inception figures reflect launch timing and market cycles far more than day-to-day fund management. So in short, both of these will give you access to Vietnam, although they're slightly different in certain ways. Please take a deeper look at these if you're interested in incorporating some Vietnam ETFs into your portfolio. Thank you for watching our video, and please check out VNAedge for more information on emerging market investing.